It's your boy Calvin here. We are in a different setup today. I really love this setup, by the way. This is amazing. I need to get something like this, right? But anyway, we're sitting across from a man that is well known in the Forex space as of recently, the former CEO of Top Tier Trader, Mr. Dave Gutman. How you doing, Dave?
Calvin, thanks for having me.
Of course, of course. How you feeling, first of all?
Feel great. I feel
Yeah,
great. 2025 is already off to a great start.
I love it. I love it.
So
Before we dive into your role as CEO with one of the top firms, I would say, um, what does Dave enjoy the most? What makes you excited? What makes you just, man, I just get a kick out of this?
honestly, it's helping other people. It's when I think if you know any of my backstory, I was misdiagnosed with terminal cancer and told I had 6 months to live when I was 24, and obviously it didn't turn out that way. But I promised myself that if it turned out okay for me, which it did, that I would touch as many people's lives in a positive way whenever given an opportunity to do so. And that's just how I want to travel through life. So honestly, mentorship, which is really what you do, whether it's, my daughter and raising her or mentoring people or managing and leading people at work. It's very similar to me.
Hmm.
And, being a servant leader, just sort of like being a servant father, that's what gets me excited. And that's what, really honestly, that's what drives me.
You were the CEO, the acting CEO of Top Tier Trader.
I was.
Okay. How did you get into that role? Like, were you already in the Forex space, the day trading space? How
No,
did that come about?
it was a very weird confluence of circumstances. I mean, things had to play out in exactly the way they did, or it wouldn't have happened. But I was actually at a company. I have a strong personal interest in crypto. I got into crypto in like 2015,
Oh, wow.
and so I worked for a company called CryptoFi, and the CEO, amazing guy, great moral compass. In fact, our value systems were almost identical. One of the things I find interesting is if your value system and the value system of the person that you work for are very close, it's a great job. The further that the distance between your value systems, the more of a nightmare that job's going to be.
Mm.
But anyway, him and I got along great, great guy. But his co-founder was someone who I didn't get along with at all. And because Keon, the CEO, is such a loyal guy, he never said a single word about his co-founder. So when I got approached by a recruiter for the opportunity, I was already living in Miami. The CryptoFi was a fully virtual business, so I could live anywhere I wanted to. I got approached by a recruiter and started to understand the forex prop space as part of that process. I was like, huh. I realized that there were very, very few companies that were well run, and that presents a real opportunity.
Mm.
So for me, and there were almost none that controlled their own technology. So, and I have a pretty strong technology background. So, combination of the fact that I didn't think I could fix where I was working
Mhm.
because I couldn't see eye to eye with this one guy. Little did I know they'd push him out a few months later, but I didn't know that at the time. But anyway, combined with the fact that I really did see this huge opportunity at Top Tier, I said, you know what? I think I'll take a jump. And actually, my experience has been, because with the exception of crypto, because I worked for two different crypto companies, I've never been in the same industry twice, which
Mm.
I actually see as an advantage. Because like it happened at Top Tier. I'd come in, I'd be like, why are we doing it this way? Well, that's the way it's always been done. Well, I don't come from the industry, so for me, it's like, well, hey, let's try this other thing that nobody else is doing. So anyway, long answer to your question, but that's how I ended up at Top Tier. And boy, it was a wild ride.
How long was that vetting process for you personally to kind of understand the industry and just kind of see? And of course, I'm pretty sure you had conversations with your wife about this. Yeah,
I
like
did.
how long was that decision making process for you?
I would say that it probably dragged out over about 2 months, and honestly, it did take me. It took me a minute to really understand the business because it's not like what it appears.
Mm.
People at first people thought they're trading with real funds. Then I think there was some real fear about maybe regulatory stuff happening. So people started to be a little bit more transparent about the fact that they were virtual trading. Yes, you still get paid out in real money for sure,
Yeah.
but the trades are effectively paper trading, right? And so again, it took me a minute to understand the business and to understand, because I need to understand it to know I could fix it
Correct.
and to scale it. Because ultimately, that's why Top Tier hired me. They say, hey, look, we got it off the ground. We haven't scaled businesses before. You have, so that's why they brought me in.
I like it. What were your concerns like during that 2 month period? Because that's a pretty, long time, right? You just left a company, and of course, like not saying that you need an income, but as a person that's passion driven, obviously you want to get involved with something. You want to be a part of something. You want to build something. You want to help elevate something, right? What were just any concerns that you may have had that you had to kind of dig into within those 2 months?
Well, it's funny, right?
Yeah.
Interesting lesson learned that, people just need to understand. I don't care how much due diligence you do about a company, their founders, whatever. There are going to be unknowns
Mm.
that there's no way you could predict. And I'll give an example in a second that bit me in the ass. I thought I was fairly clever because what I did when I negotiated my deal with them is I know that I can understand an industry and fix almost any business if I have a year.
Okay.
So my deal with them was you have to agree to pay me for a year. You can fire me after 3 days, but you have to agree to pay me for a year because I can fix anything in a year if it's fixable, right? So that was the deal. So I felt like, oh, I've mitigated my risk because, hey, they're going to pay me for a year no matter what. I'm going to kill it and we'll be good.
I like that.
The day I started, MetaQuotes pulled our license.
You're lying.
That
was your starting day.
June 20th.
Oh my goodness.
June 20th was at 2023. And my first day, I walk in, Jamal Hollingsworth is sitting there and he looks up at me and he's a very stoic guy. And he's like, today might not be the best day for you to start. We just lost our MetaQuotes license, which means none of our customers could trade. So the day I started, we effectively lost a little bit more than half our revenue.
Wow.
Like that. So the business I thought I was running now just got cut in half, a little bit more than cut in half, actually.
Wow.
So that was day one. So,
wow.
So
Okay.
how could I have figured that out in due diligence? There's no way I could have.
There's no
right?
way. There's no way.
And so ultimately, you have to control the variables you can, and just the rest of it, you gotta just, it is what it is.
You just dropped like some fire CEO nuggets right there, which I'm sure you get into that in your personal podcast.
I try.
The Dave Gutman podcast. When negotiation, it's best to kind of like see if you can lock in your financial future for a certain time period so you can focus on working and solving problems. I like that.
Yeah, it was a little bit of that. It wasn't so much about the money, which was, hey, look, I'm going to leave something that's, was a pretty decent situation.
Yeah.
We had just closed on $5 million in funding and we just signed up our first clients. So the business was in a decent place. In fact, the best place it had been and since I joined. And so I left at the time when things were really good. I'm like, I'm only going to do that if I know they're going to, because again, no matter how much due diligence, I liked everyone I met, during the dating process, if you will. But you know how that is, right? Everyone's nice during the dating process. Great, yeah. So I'm like, everything seems great. But, what I learned, it's funny, years and years before, really the first business I ever ran, it was a call center business and we acquired 13 call centers. 12 of those acquisitions went smooth as glass. The 13th one was a disaster. And again, we knew during due diligence, the guy was being kind of shady. And so what we did was we thought we were so clever, again, thought we could contract around the distrust. You can't contract around distrust because you can't think of all the ways somebody could screw you. What we did was we knew he wasn't being honest during due diligence. We didn't know by how much. So we structured the deal as an asset purchase where we paid him very little money at closing and the rest of it was in a seller note. So he's financing the deal. So we're thinking, well, if he lied to us, we'll just offset the seller note and we'll be the worse.
Yeah.
That's how a rational person thinks, right? He wasn't a rational person. So what ended up happening was he lied, we offset the seller note, and we spent the next 18 months in depositions and courtrooms. And again, we ultimately prevailed. It wasn't a bad financial deal for us, but it was a huge distraction for a year and a half. We should have never done that deal. And what it taught me was you can't contract around distrust. Now, fortunately, in the Top Tier situation, it wasn't about that. I'm just like, I don't know that they're experienced enough to give me the runway I need to do what I need to do. So I contracted around the thing that was obvious to me, which is, hey, so long as they give me a fair shake to build this business up, I'll do it. And so that was the thing I focused on.
Okay. I like that. One thing that I'm very, very curious about, because even though I've been funded with A lot of prop firms, maybe, man, probably anywhere between 7 to 10 different firms at a time, where they were coming in by the hundreds, every day there was a new firm. Um, but I've never really understood, how would one start a prop firm? Like, how do these companies get started? How
Yeah.
easy is it to start one? What's needed to start one, and what goes into that process? Because now a lot of them have gone, but there was a season in 23 where they were popping up left and right.
Yeah. So, again, that was what appealed to me about the space. So here's the reality of it that I think most people don't really understand, is that the reason why it attracted so many new companies into the space was because the way it works is, so, the funded trader, right? They were on a technology. Easton was the name of the company. Top Tier was on a tech company called Red Acre. There's a few. There's 3 or 4 of these tech back-end providers that power almost 100% of all the prop firms.
Okay.
So what they would do is they would approach an influencer, could be someone like you, could be someone like Q Banks, right? And say, hey, look, you're a successful trader, you've got this big following, put your face on it, we'll do all the work, you keep most of the revenue. So what ends up happening is the startup costs are virtually zero. The marketing costs are relatively low because you're mostly leveraging your personal brands, right? And because the payouts lag revenue by like 6 to 8 weeks, you're profitable the first day you open your door. Find me another business where there's zero startup capital required and you're profitable on the first day. I don't know any other one.
No.
And so, of course, what happens is it attracts a bunch of new entrants that have no idea how to run a business. And not only that, but in fact, that was my single biggest challenge at Top Tier, was how am I going to build a sustainable competitive advantage as a product if I don't control my technology? And you're sharing all the same tech. So in the case of Red Acre, we were paying for 4 full-time developers to work on our stuff. But whenever we would develop a new capability, all their customers would get it.
Everybody had access.
So it was built into the system that you couldn't create a competitive moat. And I'm like, we have to control our tech or we can't control our destiny.
Hey, what up, traders? I wanted to tell you about Calvin's VIP trading group. This is my official trading community. Now, number one, the first objective is I want to show you how I am getting into my trades each and every day. I want to walk you through the process that I've learned and that I'm following each and every day. And we do this by giving you easy to follow, very beginner friendly videos to watch on a week by week basis that break down every single step of the process that I am following to find my trade setups. The videos are super short, so don't even worry about being bored out or getting lost and confused in the videos. They're super short, easy to follow, and on top of that, we couple each week with a homework assignment that helps me understand how much you understand so that I can better assist you moving forward. Next, I'm going to be meeting with you every single week for coaching, give you some motivation, and of course, to check your homework to make sure that you're understanding everything that we're sharing with you. And last but not least, I guess this is the icing on the cake, you and I are gonna meet Monday through Thursday and trade live so that I can show you how everything I'm teaching you works in real time. So if you're interested in learning and growing with me, your boy Calvin, Forex Beginner Podcast, visit calvinandnewtrader.com or click the link in the description and let's get started today. So the tech providers are essentially like they own the whole industry.
They do, and because the people that they're partnering with are almost all, a lot of them are 20-year-old kids,
Correct.
right? They've never run anything. They haven't even, they probably don't even know what a checkbook is, let alone balance the checkbook. So now all of a sudden you're trying to, manage a profit and loss statement, an income statement for a business. You've never run anything. And so, what ends up happening is things look great the first few months. And then the payouts start coming and you don't have a risk management team that knows what they're doing, and the payouts hit you and you get hit by a tsunami of payouts and then you're done.
Yeah.
And so that's why you were seeing it. And then the part that was amazing was even the behemoths like my Forex funds and the funded trader, companies doing 12, 15, 18 million a month in revenue evaporate almost overnight.
Yeah.
And you can only have a situation like that when the people that are operating those businesses aren't sophisticated enough to understand how to manage risk, manage cash flow, because they just haven't done it before.
Yeah. And I publicly gave a lot of kudos to Q and Anthony for seeking you out, because they were like the first that I saw that was saying, look, this is a real company. We need to hire somebody that knows how to run real companies and let them steward this thing, especially through these waters. And now that I learned that acquisition actually happened before the MetaQuotes thing, it wasn't a reaction to MetaQuotes, that really shine some light on Q and Anthony and just their vision for building legit businesses and not just trying to come in and grab a bag and go. So I salute them for that.
100%, 100%.
Yeah.
No, and it was very clear from the beginning. I think things might have turned out differently if we hadn't lost half our revenue day one.
Yeah.
Obviously that's a tough starting place.
Yeah.
It's like 100-yard sprint and you start 25 yards behind the starting line.
Yeah, for sure. There were some traders that I saw, that had a small following, like 20, 30,000, subscribers on YouTube and a few, 100,000 on Instagram or TikTok, whatever the case may be. And I saw they started firms and it lasted maybe 6 months and then boom. So again, what you were just explaining, tech company sees influencer, sells them the dream. They get started. They're excited. Oh, my first business. I could put my name on it. You know what I mean? And then when things go down, everybody's affected who's attached to that tech company. Do you have any insight on what kind of happened with the funded trader? Because I think from what I heard that was a ripple effect of the big company goes down and then all the smaller companies attached to that company fall.
No, it happened. And the reason I know a bit about this is when the funded trader went under, I used that as an opportunity to scoop up a whole bunch of their best people. And I got some really, really talented people from the funded trader. They did a lot of things well. But really for their big issue was, so in my opinion, a well-run, well-managed prop firm that's treating their customers fairly and doing payouts properly, they're paying out somewhere between, depending on the month, between 30 and 40% of their revenue in payouts. That's a healthy business. And that's a business that's, reasonably sustainable. You can have 15 to 20% net margins on a business like that.
Okay.
The funded trader was paying out 75% of revenue.
Wow.
So you're doing 15, 16, 17 million. You're still okay paying out 75% of revenue as long as your revenue continues to climb. As soon as you have 2 or 3 months, the revenue doesn't even have to come down that much. Revenue comes down 15, 20%. Because again, the payouts lag revenue 6 to 8 weeks.
Yeah.
Now you've got, 3 to 4 million less in revenue. You got the payouts from the higher revenue months. And if you don't have the reserves, it's over.
Yeah.
And so then what ends up happening, and this is what happened with the funded trader, and there was a bit of a comedy of errors. Again, inexperienced, unsophisticated managers. And what happened was they're like, well, if we pay out all these payouts, it's over. So they start finding weird ways to not do payouts, and they launched a system to sort of automatically check for when people had violated things that they hadn't caught, and they were basically using automation to basically invalidate the accounts, and they were having something like a 50-60% false positive. So they're blowing people's accounts that shouldn't have been blown. Then in a panic, they sent an email to everyone. They emailed everyone other people's passwords. I mean, it was just a mess. So the Discord, which had been a huge boon for them, they had the most active, largest Discord in the industry. That's great when they're all saying nice things about you, and it helps you grow. You know what happens when it goes the other way.
You already
now all of a sudden, now you're circling the drain, and that's basically what happened.
Wow. You've seen a lot of data, pass rate, fail rate, success rate. Let's get into this a little bit. From your experience, what is an overview of how many traders pass per month, how many traders fail per month, and how long does it take the average trader to actually get to a point where they actually pass the challenge phase?
Yeah. So it depends on a few variables, and it does change over time. So as an example, when the funded trader, because the funded trader was doing so many payouts, they attracted some of the better traders, right? Which is part of what, and again, the longer you're around and the better your reputation for being, fair with the payouts, the more good traders you're going to attract. So the reality is, ironically, the ones that are the shadiest in some ways might attract the worst traders, because people that have
Mm,
been around the block a little bit, they're going to have been in other discords and they'll know a little bit, at least enough to be dangerous, and they're going to shy away from those new firms. So when the funded trader went under, when my Forex funds went under, when FTMO pulled out of the US, all of a sudden now you have all these better than average traders, right, sort of flooding the market. So that moved payout rates up a bit. But in the US, my experience, and not just from top tier, but from knowledge I have about a whole bunch of other firms,
hmm
um, you get about 5% of people that get funded, get to the funded phase,
Okay.
and about 2 to 2.5% at most get a payout.
Wow.
So it's a very small percentage. And, look, at the end of the day, though, and I made this argument before when I was running the business,
hmm
which is like every other business, like, if, we both pay auto insurance and I get in an accident and you don't, your premium's paying for my accident, right?
Absolutely.
Like, so that is how it is. I think the industry isn't nearly as transparent about that as it should be. The answer to your other question, how long does it take to become a successful trader? Again, it depends a little bit on how disciplined and so forth you are. It's a minimum of 6 months.
Minimum
And I would
six
say
months.
12 to 18 is more common.
Okay, that's what you're seeing with the
Yeah.
consistent traders.
Mhm.
Okay, I love it. Were there a lot of successful traders that were getting funded and making consistent payouts with their accounts?
It's surprising to me. I think part of it is that the better traders, the ones that have been in the industry for a minute,
hmm
they weren't putting all their eggs in one basket. Like, how many times you got to get burned, because again, you're with the big dog, you're with my Forex funds, they were huge
Yeah.
and then gone. Or, oh, I'm with, the funded trader, they're huge, gone. I mean, they're technically still around, but for all intents and purposes, right?
hmm
And same thing, FTMO, been around the longest, pulls out of the US. So when you've been burned enough times with stuff like that, what people start to do, understandably, is they're not doing challenges with one firm. They're doing challenges at 3 or 4 firms.
hmm
They've always got 2 in funded phase, 2 ready to replace those if the ones they have, they blow those accounts. They're doing smart risk management. And so surprisingly, there was a shockingly small number of people that got more than 5 payouts in, as a customer, say, of top tier. A very, very small number would get 5 or more.
Okay.
So it's more like they'd get 2 or 3, then they'd maybe get 2 or 3 somewhere else. Maybe they'd come back, they'd get a couple more. But they're really there's a very, very small number of people that long term do that. The other thing I would say as part of the reason for that, though, is there are a bunch that will graduate and just go to their own brokerage accounts. They'll
Yeah.
get a brokerage account and they'll just trade their own funds. Now, I think for some people, the psychology is harder when you're trading your own funds as opposed to virtual funds. So I think there are some people that it's just better psychologically for them to trade firm fund, virtual funds than their own hard currency.
hmm
But I think most people, once they've been around the block, they've gotten a bunch of payouts, eventually move and they're doing they have their own brokerage account.
I like that. Um, One of the things that like I've always wondered is um it, uh, so the best way to put this is this. Like a lot of traders feel like there's a mystery curtain around brokers, prop firms, and things like that. Um, and traders feel like they've been given the short end of the stick, right? Um, a lot of traders have moved over to futures and
Mhm.
they're trading and doing challenges on the future side. My argument has been personally, if you do the numbers side by side, it's actually cheaper to do a Forex prop firm in the long term than it is if you do a futures prop firm. And then if you think about the broker side of trading your own money, if you're going unregulated broker, which many of us traders do because
Mhm.
of the leverage, right? We don't know if they're ever taking our trades anyway. You know what I mean? So
Yeah.
we're always in this virtual environment,
Yep.
like so to speak, right? So my take has been if they're paying out, regardless if it's Forex prop firm, futures prop firm, broker account, your personal funds, we don't even know if we're ever in the actual market anyway. So
That's
as
right.
long as there's an opportunity to invest a little and come out on the other side with more, there's an opportunity there. What's your take on everything I just said?
You make a very strong argument and you're completely correct.
Mhm.
So the reality is even regulated brokers. So the concept of A booking and B booking, traders, which, for maybe people that don't understand what that means, if you're being B-booked, and the vast, vast, vast majority of traders are B-booked, your trades are never being placed. Effectively, what's happening, I mean, it's just like when a prop firm, it's a virtual trade effectively, and the brokerage firm is the one taking the risk. So if you actually do win the trade, they're the ones having to pay you out. If you're A-booked, then that means the brokerage firm is effectively, placing your trades in the market, and they're coming alongside with you, right? There are a handful of firms. The only one I'm aware of is the Funded Pro, where they claim, and I think this is true, that they A-book everybody. I can't know it for a certainty, but I'm fairly sure that they do.
Okay.
Everybody else, most people are B-booked, and the numbers that I've heard, and I don't have this knowledge firsthand because I've never run a brokerage firm, is that 90% of the traders that are in a broker lose 90% of their money in the first 90 days.
I can believe it.
Yeah,
For sure.
So so that's why they're B-booking. It's just smart business, which is, hey, let me B-book everybody for 90 days, and then I'll A-book that very small percentage that is doing well. I'll take it on the chin for some, but on the other 90%, I basically have found money for me.
Yeah.
And so that's the reality. And so your point is, you never really know, even if you're in a regulated broker, you never know for sure. And the reality is, the reason to go with a regulated broker is you at least have a lower probability of them playing any shenanigans with spreads and things like that. I will say some of the shift to the futures market, because you're right, I think the pricing is much less transparent.
Yes.
Because, it's like, an activation fee. It's like they get you by death by 1,000 paper cuts, right?
Yeah.
Yeah, it's hard to figure out what's the price, right?
Yeah,
and comparing is very difficult. But I think you're right. It's probably slightly more expensive. But I think the reason it's happening is because of the implosion of so many Forex prop firms. That's just scared people. And that was one of the big challenges we had at Top Tier, and the reason why I focused on education so much in the Top Tier Academy that they subsequently decided to shut down. But the reason why it made so much sense to me was these prop firms are fighting over a shrinking market, a shrinking number of customers, because so many people are leaving and going to futures. Now, what a lot of the firms are doing is they're launching futures too. I know Top Tier is about to do that. I know a bunch of other firms, I think the Funded Pro is doing it. A bunch of them are starting to do that now, and that makes a lot of sense. So ultimately, whether you're going to be in futures or in Forex, a lot of the firms are going to do both. I talked about this when we spoke on the phone that day. I think the ones that are going to still be left standing are the regulated brokers that eventually, either have or are going to launch their own prop divisions, if you will. Those are the ones that they're already regulated. So when regulation comes calling to the Forex prop space, which it absolutely will, I would put it at 75% probability in 2025, but by 2026, almost 100% probability. And the firms that aren't ready for that are going to struggle. And a lot of them aren't going to be able to deal with the cost of being regulated. So I think the smart move for a lot of people is, hey, focus on prop firms that are connected to a regulated broker, because that's probably going to be your safest bet. Or, and again, this wouldn't help you in the U.S., but outside the U.S. with someone like an FTMO.
What's some of the biggest payouts throughout your tenure with Top Tier that you've had to approve or that you've seen come across the desk? And what's the process of that as well? Like when you have somebody that has like a 200K account and, they're due for a 50K payout or something crazy like that, what's the process? Like, does that come across your desk? Does that have to get your approval first? Like, what's the process of payouts?
So, how it started and how it ended was very different, right?
Okay.
So in the beginning, we had actually just switched from the tech back end of Easton to Red Acre.
Okay, so you guys were on the Funded Traders, like
we were before, like right before I joined. In fact, we were like 1 foot in, 1 foot out, and so half the data I needed to analyze was still on Easton's back end, and half the data I needed to analyze was on Red Acre's back end, and it wasn't even the same data structure. So one of the first things I did was bring in a guy I'd worked with before, built me a data warehouse so I could homogenize the data and really figure out what the heck was going on, do a little bit more on the risk management side, because you've got it. So ultimately, once I had those processes in place, and then when, I built up a pretty decent risk management team. And as an example, once I looked at the data, I saw that something like 55% of our payouts were going to like 10 countries, none of which were the US. And the payout rates proved unequivocally that there were groups in those countries that were cheating. I didn't have enough data to figure out how they were cheating.
Mm-hmm.
There was no way. Like Egypt had something like a 65% payout rate, which is impossible. It's supposed to be 2%, 2.5%. It can't be 65%.
Wow.
No country has traders that are that good. So that means they're finding a way to game the system, and without having all the data you need, it's hard to figure that out. So what we had to do is the only way I could think to manage the risk and not damage our reputation was we just banned those countries outright, and we refunded everybody. So we gave everyone their money back, so no one felt like we took their money unfairly. But that was a way for us to sort of salvage our reputation. And that's when I started getting in front of the camera was, hey, look, let me tell you exactly what's going on. And I want to be super transparent. We're not playing any shenanigans. But that's what you need to do is you need a good risk management team. You need the right data to be able to figure out. But yeah, all big payouts would come across my desk.
Mm-hmm.
I think the big, like Josh Barnes, who you had on your podcast,
Yeah.
he had a couple of our biggest ones. He had 105K, I think. I think the biggest one I saw was either 120 or 130K, something like that. At the end of the day, those things are like a double-edged sword, right? It's kind of like the guy holding up the lottery check, right? It's like you can make a lot of hay with that from a marketing standpoint, and you need to, right? And it's like, because, hey, this is a cost of doing business. You got to at least make the best of it. So when you do have, and this was something that an idea that I again, I think that, in education, they call it plagiarism, and in business, they call it best practices.
Mm-hmm.
So, one of the things that the Funded Trader I thought did really well was they really did a great job of highlighting their traders, bringing them into town, showing them a good time and making a lot of content around that. And so we started to copy that and did our top tier experience content. And that, sort of helped, I think, push things along for us.
What's going on, traders? It's your boy Calvin here, Forex Beginner Podcast. If you are looking to trade Forex, if you're looking to trade indices, if you're looking to trade commodities with up to $800,000 in simulated prop firm capital, look no further than Blue Guardian, the prop firm. Blue Guardian, the prop firm, offers traders like you and I the opportunity to get up to 90% profit splits once we reach funded status. All you got to do is pass their challenge process, proving that you have a trading plan, that you can manage risk and meet the profit targets, and boom, you are a Blue Guardian funded trader. And most importantly, you can enjoy weekly payouts, fast payouts, and as long as you maintain the funded account, consistent payouts. Ladies and gentlemen, if you're looking to get funded, simulated prop firms up to $800,000, check out Blue Guardian, the prop firm. Now, if you are a futures trader and you are all into the futures scene, guess what? Blue Guardian Futures is here. Ladies and gentlemen, enjoy no activation fees. That's right. You heard me say it. No activation fees. You pay your monthly subscription, and once you pass the challenge phase, your monthly subscription is canceled and you are on to funded stage. Also, once you make it to funded stage, you get 100% of your first $15,000 worth of payouts. Ladies and gentlemen, Blue Guardian Futures is here. If you are a trader, whether it's Forex, whether it's indices, whether it's commodities, or in the futures market, Blue Guardian has you covered. Check them out, blueguardian.com, and for futures, blueguardianfutures.com to get your challenge started today. Like when you have these traders like Josh, for instance, and they have this huge payout, do you personally look at their account history, like look at how often are they trading, when are they trading? Like, do you guys look at the profitable traders and kind of study their data? Like, do you use that in any way? Because as a business person, like I thought originally, and you can educate me on this, that if I'm running a prop firm, or even if I'm running a broker, right? And I know I have a lot of like traders that aren't successful, I would create something in the background to go against the unsuccessful traders, but kind of mimic algorithms around the successful traders. Is that a income stream that prop firms are not tapping into? Is that something that's there, or is it just some may be and some may not be?
Calvin, it's funny you say that. I had the exact same thought. It just seems so logical.
It seemed logical,
me,
yeah.
Right? Like, hey, if this, these guys or gals are doing, killing it trading wise, they're in the 1%. Let me just copy their trades. It doesn't work for a couple of reasons. One, you don't have enough data. Okay. Even someone, because, you asked the question, how long do they stay with you? 50% of our customers bought one challenge.
Oh, wow.
And the number of customers that stayed with us after, 4 months was shockingly small. I mean, I don't remember, maybe it was 3%, 5%, 8%. It's a small percentage, right? So you really don't, the lifetime value of a customer is a lot less than you think. And so they're not with you for that long. So and they're not placing that many trades. So you don't have enough data for any trader. So the way you do use trading data in a way that, has some utility as a business when you're running it is, how am I going to modify some of my payout rules? Right. Because again, if you're being honest with your customers, as I was doing, I'm like, look, I told people straight up when we banned those 10 countries, I said, I'm really sorry we had to do this, but we had to do it. And here's why. They were cheating. We didn't have a choice. I said, but here's my promise to you. I will never change a rule again without giving you 1 month's notice, and it will go into effect on the first of the month. Okay. And I'll notify you a bunch of times in between, so the rule is going to change. But I'm telling you in advance, some rules will change. And the reason the rules have to change is, if my payouts get above 30 or 40%, I don't have a sustainable business. And so I have to make it harder and harder. And so that's how the data can be used in a useful way, which is, hey, what are the rule changes I could make to still allow people to be successful if they were trading in real market conditions? Okay. But do it in a way that will reduce payouts enough so that I still have a business, because I can't pay out anyone if I'm not in business.
Yeah. I like that. From our phone conversation and just that little short span of time, the first thing I took away from this, I'm like, man, I wish I had this conversation like a year ago with Dave, because what I gather from even just what you just shared is that I think for profitable traders that have edge, have a consistent process for getting into the market, I think the best opportunity is when a firm is brand new, just knock them across the head early because they don't have things in place. Like, they don't have data yet, like all of their rules, their payout structure is based off what other firms are doing, a variation of that. And a lot of people come into the market trying to make their rules a little lighter than what other firms are doing to get appeal. So, that's just what I gather.
Calvin, that's actually pretty smart. I hadn't thought about that, but you're right for a few reasons.
Yeah.
Because what's interesting is, if you're a new prop firm, you're looking for some winners. You're looking for some early winners. You actually want to have some early winners so you can brag about them.
Yeah.
If you got no one getting payouts, so I never thought about that, but you're actually right.
And then what you don't want is somebody get a nice payout and you deny it.
Right.
That's not what you want either. So that's what I took away. Like, so if anybody's watching right now, that's just something we giving you today.
Yeah. The one thing I would say is, you definitely want to, that's a terrific idea and strategy. What I would say is, take them for a payout, but if you make it too monstrous, then it might be game over for them. And
yeah. So are there any conversations with, like, if a trader is consistently knocking you guys across the head with just big payouts, and you're checking the data, like they're not violating, like, they're just in a season, because traders have a season where the luck is just on their side. They're over risking, but the luck is just there, like they're getting in at the right time and it's just there, especially before, like firms started really lowering that leverage, when the leverage was like 100 to 1, you know what I'm saying? It was crazy, right? Do you guys ever have conversation, or did you ever have conversations, like, if there's a consistent trader that's just like, we're paying them too much, do you guys go on the back end and lower that account's leverage or something? Like, is there conversations is there ever anything like that?
No, we never did. I wouldn't. I'm a fiduciary, as CEO. I would have never done that. And I'll to their credit, Q and Anthony, Nick, they never asked me to either. So we never did that. I can't speak for other firms. If I had to guess, just from some of the shenanigans, that came out from some of the legal filings and stuff, that my Forex funds and the funded trader, I think there's some shenanigans going on. Don't know all the details.
Yeah.
But I think that you have a situation where people are probably justifying their action and saying, well, if we don't do this, we're going to go out of business and we can't pay anyone out. Right. So that's the justification. I think that is one of the real benefits, that getting to a scale like where Top Tier was, that was never going to be an issue for us. Even if we had 2 or 3 traders that were really dinging us, we'd have a couple of mediocre months from a profitability standpoint, but it wasn't going to put us under.
I love it.
So
how profitable are prop firms?
A well-run prop firm, which is not trivial to do, I know from first-hand experience, you're going to have something like 15 to 20% net margin. So on a $10 million a year revenue base, you're going to make $1.5 million to $2 million in net income, roughly.
That's really good. What are the Okay, in terms of staffing out your prop firm, right? As a CEO, what are some hires that you made? And like, did you have to make any fires?
Yeah. Anytime you're scaling a business, if you're not having to fire someone, you're doing something wrong.
Okay.
Because you got, there, when you're scaling a business, I mean, at top tier, I think when I started, we had something like, if you counted full-time contractors and stuff, we had maybe 25 people. And 14 months later when I left, we had 60.
Wow.
So, you can't possibly scale that fast and not make some hiring mistakes. And I definitely made a few. But what you got to do when you're scaling a business and, having done it before, hire fast and fire fast, especially, whether it's on a skill set standpoint or an attitude standpoint. And it's funny, I'm 58 years old. I've had C-level positions at 15 companies, something like that. Had a couple of, pretty big financial exits. And I learned more in this last year and a half than I had in maybe the 5 years prior about hiring. Because I hadn't hired that fast before,
Mm.
And what I realized was two things are critical. Hire with attitude being your number one criteria. Do they have the right attitude? Forget about the skill set. And some things, you're a coder, you've got to have certain knowledge about something. Yeah, you got to have a certain skill set. But even then, attitude. And then the second one is humility. Because humility, the fact, the ability for people to be able to be wrong, take in new information, work well with others. If there's too much ego, that's a nightmare. We had a guy who we literally, a Venezuelan guy, we fired him, I think it was 2 or 3 weeks because he was just pissing everybody off. And you just can't have that. Just super, huge ego.
So were most of the team, so you went from 25 to at the peak 60 employees in contractors, combined basically. So how many of that 60 was remote and how many were actually showing up to the office?
So that was another thing too, that it was one of the reasons why I decided to take the top tier job was, again, I'm now back at Investify as president. We used to be called CryptoFi. Now it's Investify. Still fully virtual, which again, for me, I prefer to have an office to go to. There's just a certain amount of, water cooler conversation or whatever you want to have it, where you kind of step in hey, let's, whiteboard something out and you have a conversation. Yeah, you could jump on a Google Meet or a Zoom call, but then it's not the same thing. It's just not.
Exactly.
I would say it was something like 18 to 20 were in the office and the rest were remote. Okay. We actually had a pretty big contingent in Cali, Colombia, where we got some just really talented, and by American standards, really inexpensive folks that just really moved the needle for us in a way that, I kept people costs, even with, all that scaling, at 8% of revenue, which to me is hard to do. Usually a company growing as fast as we would normally be 15 to 20% of revenue. We ran it at 8% of revenue. And I think that's partly because we were using some pretty inexpensive contractors that allowed us to keep those costs under control and really hire people that, because when you hire people, or even contractors too, you bring people into your organization that have that attitude where they're just going to find a way to figure it out. Mm-hmm. The only other people they recommend are people with a similar attitude. And so it kind of builds on itself. It goes both ways. If you hire the wrong people, it builds on itself. And if you hire the right people, it builds on itself.
That's really good. Let's get into some CEO talk right now. So I've always wondered this. Like, I know how I do it, but I've never had to staff a business like with employees. It's just contractors. Hey, like, what's your rate for this? Okay. Can we work out a retainer monthly? Let's do that, right? But in terms of an employee, a person that you're responsible for, how do you determine wage? Is your wage, hey, here's what I need, this is what I'm willing to pay them, but then you meet somebody and they're a superstar. Like, you can feel the attitude and you can see the mannerisms and the resume is subpar, like just above average, right? How do you go back to your board and say, hey, this person like wants more, I think they deserve more, or they're worth more, and I'm willing to take a hit on this? Like, how does that process work?
It's a great question.
Yeah.
So you have to come at it, you have to triangulate it on it in a few different ways. Mm-hmm. So one is what they're asking for. 2 is what they made at their last job, right? 3 is what you can afford. Because at one level, if you can't afford them, it doesn't matter, you know,
Anyway.
what they want, right?
Yeah.
So if someone's asking for something crazy, right? The other thing I'll say though, to your point about someone being a rock star, I haven't found that to be an issue, and I'll tell you why. What I do when I meet somebody like that, because some people are just, they're really good, you know, at talking the talk, but not so much walking the walk, right? We've all met people like that.
Absolutely. You got to sell
Yeah,
yourself, right?
exactly.
Especially in Miami.
Right. If you can't, exactly.
No point
exactly,
intended to my Miami people.
Yeah. But the person who can really deliver, they're willing to put their money where their mouth is. So what I do in situations like that, now in a sales situation, it's really easy because you're like, hey, my top salesperson at the telemedicine company I ran, I mean, she made 4 times what I made. You know, she's making, she can make $700,000, $800,000, $900,000 a year. But she deserves it. She's the one generating all the revenue. She did more sales than the other 5 salespeople combined. So it's like, you want to make that person, as much as possible. In sales, it's relatively easy, but in other positions, what you do is you say to someone, look, here's what I'm going to bring you in at. Here are the things I need you to do. Here are the things you say you can do on top of that. If you're able to deliver on even half of that in 3 months and 6 months, here's what I'm going to move your salary to. So you agree up front, right? And again, part of it too is, my management leadership style, my personality, I'm pretty good at building rapport with people because I'm a pretty vulnerable guy. I'm very authentic. People can usually, feel that. And I'll be like, look, talk to some of the people who have worked for me for the last year. Ask them if I'm a man of my word. Right. And, again, when I interview people, I don't just interview them myself. I interview everyone. So I get them comfortable that I'm going to do exactly what I said I'm going to do. And if they really can deliver, they're not going to have an issue with it being performance-based so long as they know they can trust me. So I have to make sure that they trust me. And then I say, look, if you're able to do this, here's what you're going to get. And they're like, oh, that seems fair. I mean, the guy who ran my marketing team, 24-year-old kid, I originally hired him to manage Discord. And within 4 months, he's running my whole marketing team. I think I gave him 2 raises in 9 months.
Wow.
He went from something like, was it 80 to 115 or something like that, and he deserved every penny.
Absolutely.
But it's sort of he would be like, hey, if I do these additional things and I kill it, is it reasonable for me to ask for this additional compensation? I'm like, yeah, absolutely it is. And if you do that, it's yours.
I love that. I love that. Man, we need more CEOs like you. We need more CEOs listening to the David Beckman Gutman podcast. What am I thinking about? Oh, but man, I love that way of seeing things and viewing things. So you're no longer with Top Tier.
Right.
You went back to your roots with the crypto. So talk about how that came about and the opportunity to go back and lead a company that you helped build from the ground up.
Yeah. So, honestly, leaving Top Tier was one of the most painful, difficult decisions I've ever had to make because the team I built was the best team I'd ever put together. They were willing to do anything. They was just all rolling in the same direction. I had a couple of bad apples that I got rid of, and there's a little bit of nepotism I had to deal with. But for the most part, it was really going amazing. But it really just came down to the fact that the leadership of the parent company just didn't have the experience to understand what I was doing. What I was very careful about is when I came on, especially because we lost half the revenue in day one. And Top Tier never had a budget. I don't know how to run a 8-figure business without a budget. So I said, look, I'm going to put a budget together where I'm going to insist on quarterly board meetings. We're going to review the budget. You're going to approve the budget, and that's what I'm going to perform against. So it'll be very clear about whether I'm performing or not. And the deal was, so long as I'm performing at or above budget, I get to make all the decisions.
I like that.
Right. And so that's what we agreed to. When I resigned, I think I just gotten the August results, and through August for that year, we were 500% above budget on net income. So we're killing it, right?
Yeah, definitely killing it.
But ultimately, leadership didn't see it that way for reasons I don't entirely understand. And once they made it so that I wasn't able to make all the operating decisions I needed,
it was time to go.
I was just like, look, then I'm not really CEO. If I can't make all the decisions, if I'm delivering the results, if I'm not delivering the results, shit can me, no problem, right? Or come in and micromanage me because if I'm screwing things up. But if I'm doing what I said I'm going to do, you got to let me make the decisions. Otherwise, I'm not running the business. And I can't be accountable if I don't have the authority, right? So I'm fine to have all the accountability in the world, but you got to give me the authority.
I like that.
So once I realized I was went back to Keon, the CEO of, it was now called Investify, because we used to just do crypto. So what Investify does, it's kind of cool. We build into even huge banks like a Wells Fargo, none of them have their own technology. So their mobile app, their websites, there's about a dozen companies that do all the infrastructure for all the banks and credit unions in the country. There's about 8,000 of them. And what we do is we build into those 12 sets of infrastructure, which allows any one of the banks or credit unions on that platform to basically flip a switch and allow any of their customers to buy, sell, and hold crypto, stocks, or ETFs. So we just did crypto in the beginning when we were CryptoFi. And then once we added stocks and ETFs, we changed the name to Investify. So I reached out to Keon and I said, look, I've decided I'm going to leave Top Tier. I've got some control over when it happens. I said, I get it. Like, maybe you don't want to take the girl back who broke up with you. But he also understood the fact that he wasn't the reason I left. Like, it was funny because after I had taken the job at Top Tier, and he came to my wedding, and, and once he basically came to me and said, hey, look, I need help on getting the co-founder out. I was like, dude, if you had told me that you didn't want him in, I'd have stayed. Like, I wouldn't have left, So he kind of already knew that I left, but I left for reasons that he didn't understand fully at the time, but now he did. So I came back and I said, because I stayed on the board. So even after I left CryptoFi, I stayed on the board and, and had been really engaged in the business, and I'd helped the business along quite a bit, for free, just as a board member. I still had equity, right? So that was the other thing. I still had equity. So I still had upside in it. So I was like, look, just because I'm in all these board meetings, I know the problems you're having. I can help. I said, but I understand I broke up with you. So if you don't want to take me back, I totally understand. I'll just do something on my own. I said, but if I'm going to do anything, it'll be with you, or I'm just going to do something on my own. And Keon's like, when can you start?
Wow.
So that's how it played out.
Worked out perfectly.
It did. And not only that, but the business, since I had left, had just taken off like a rocket ship. And so, yeah, no, it all played out better than I could have anticipated, though it broke my heart to leave Top Tier.
Yeah. Yeah. As I told you on our phone conversation, just the sign of relief that you brought through your time with Top Tier to traders was well needed. I mean, you gave traders a feeling of, okay, this is a real professional that's giving us insight on what's going on, being completely transparent. Like, in a lot of your like, what do you want to call them? Like your public service announcements, right?
Yeah, I guess.
Like in those videos, it wasn't just, well, from my vantage point, it didn't feel like you were just talking about Top Tier, or you were just, like speaking to top tier traders. You were talking for the industry from my standpoint, right? And it was really, really needed at that time. And I appreciate it. Like, I saw a couple of those videos. And so your time there was definitely great. From my perspective, I felt like you had great impact. The keynote event, it was amazing. You know what I mean? So the Top Tier Academy, it's still there. So some traders can still get involved on it. The websites and things like that still up. So that's something that you were a part of. That's awesome. But I do want to get into what you're doing now. For you, like, my first question would be, for you now going back into a business that has skyrocketed, what is your approach? Because with Top Tier, they got it to a certain level, but they wanted to go higher. So you kind of had, the leeway to kind of, okay, here's some angles I think we can go, and here's some things we can do with the team and things like that. But now you're coming into an industry that is literally red hot. You know what I mean? Things are going up in crypto right now.
Yep.
There is no first day showing up, your only access to your customers to get in the market gone, and you putting out fires. This is a company that's going up. What's your approach when you come into this situation now?
Every business and every situation is a little bit different. Part of the benefit of being old as dirt is I've seen it all. And I've made plenty of mistakes. Like, even back at Top Tier, I could tell you every mistake I made and the reason I did. And look, at the end of the day, it comes down to making data-driven decisions, right? So we just got our budget approved at the end of 24 for 2025 for Investify. And, and what it really requires is, and people really underestimate this, one of the most useful things I learned in my professional experience is how important understanding financial modeling and forecasting and budgeting is. Not just so that you have predictable cash flows, though that's certainly important, especially when you're trying to make payroll and when you're in a startup where things are really scrappy.
Mm-hmm.
I mean, Investify almost went under at least 15 times. I mean, now we're in
Wow.
amazing shape. It's great, but it didn't start that way. You have to treat every business differently, and you have to build a bottoms up model. So when Kian and I were doing our planning for 2025, I'm like, okay, we have to scrap everything we've done from a sales pipeline standpoint. I'm going to build a bottom up model from when we're going to close deals, how big they're going to be, how much revenue they're going to generate, which required us to finalize all of our pricing. And so by building that bottoms up model, it forced both Kian and I to understand the business in such a detailed way, that, again, like all budgets, they'll be wrong, but they'll be within spitting distance if you really get granular. And ultimately, a big part of running any company, especially if you have venture money, which Investify does, you have a board of directors to manage. And when you're managing a board of directors, said a different way, you're managing board of director expectations. So set their expectations, accurately, and they'll give you all the rope in the world. Give them expectations that you keep missing over and over again, and they'll clip your wings, as they should. Yeah. So, because they're investors, especially venture capital investors, they're more scared of risk than they're excited about upside, and so you got to manage that.
And that's how us traders should be, but we're not. We're the flip opposite, right?
Well, it's funny you say that, right? Because you're right in that, you're right in that you have to have a very high risk tolerance to be a trader, for sure. And I think that's probably the biggest challenge for people being successful traders is how do you do your risk management? How do you manage your risk to reward? I will say that, look, most venture capitalists will tell you for every 10 investments they make, one will be a home run, one will be a double, one will be a single, one will be neutral, and the other 6 will be zeros. And so, they also do have a pretty high risk tolerance, but because they know that 6 or 7 are going to go to 0, they gotta, as soon as they see the warning signs that this one might be a 0, that's when they jump in.
Oh, okay. Gotcha. Yeah. That's when they jump in.
They replace leadership, things like that.
There you go. Okay. So walk me through this, because I want to now shift this to kind of like a academy for entrepreneurship, like an academy for building a successful business. All right. So walk us through, you build this bottom up model. What does that consist of? You mentioned, okay, we need to set our pricing for certain services that we are providing. So walk us through that.
So again, it depends on the stage of the company.
Okay.
And, what the leadership, team looks like. So for instance, we have a very sophisticated head of product, a very sophisticated, chief technology officer. And so when you have, so they're coming and they're saying, look, to deliver on the product roadmap, here are the resources I'm going to need. Now, because I have a pretty strong tech background, I can smell bullshit about that kind of stuff a mile away. So I know directionally, I kind of know what's realistic. And so long as it looks realistic, I'm like, cool, these are the resources that we need. On the other sides of the business, you have to come up with a hiring plan. So, okay, we're going to try to add 25 new financial institution customers. And so one of our mantras is 25 and 25. We're trying to do 25 million on our trade desk, which is a separate division in revenue, and then 25 new customers on the financial institution side. If we were to do that, how many people would we need to support that on the customer success side, as an example? So you start thinking about all the pieces of, hey, what's necessary to implement them? What's necessary to manage them? Do I need, what does that mean to HR? How many hires do I have to make? The other thing you have to do is, because I want to say our head count now at Investify is just about 50. But we also use a couple of contract firms. So I've outsourced marketing for one of the divisions. I've outsourced IT. I've outsourced some project management. So I've outsourced HR. So being thoughtful about which functions you can outsource in a cost-effective way allows you to sort of do all the planning you need to. And again, so every one of these costs needs to be considered. So I know what the business looks like today. I now know what the business is supposed to be like at the end of 2025. Because of my experience, I know the resources I'll need. I'll know which ones I can contract, which ones I need to hire people, how long it takes to hire people, how many people I'm going to have to fire of the people that I hire, again, just on directional experience.
Yeah.
And I can basically map it out. And again, I won't be exactly right, but I'll be within 10%.
Mm.
And that's really what's necessary is, and so, but again, in order to do that, you've got to meet with every single person in the organization, really pick their brains about, because that's one of the other things that people underestimate is, and Top Tier suffered from this. Most businesses suffer from this, which is when you go from a pure startup where you don't know if you're going to be able to make payroll next month, right? You run the business in a very different way than when you've got $5 million in the bank.
Yeah.
As you should. You should run those businesses very differently. But most people really struggle between making that shift. I remember I brought this person on from the Funded Trader to run my customer success team. And she kept coming to me. I'm like, never come to me asking me for $120. Like if it's below like $500, don't ask me. Like it's not worth your time or mine. Right now, again, where we were, that made sense. If I'm in a pure startup and we don't know if we're making payroll, talk to me about every nickel. Right. So you need to know where you are in the process, and you need to help train people. So when I went back to Investify had gone from, losing $3 million a year to last year, I think we made $7 million in profit. And all that happened in like a 9-month period of time, that whole shift, but people's thinking didn't shift. So they used to think about, hey, we have to worry about every single nickel we spend because we're losing money, to, oh, we're making money. Now, again, you got to be careful. You don't want to be reckless and just spend money willy-nilly, but you have to be thoughtful. And so part of my job was, when I was going to talk to every one of the departments and all the people, was, tell me what your friction points are. Tell me what your bottlenecks are. And let's decide together which one of those we can buy our way out of, and which one we just have to deal with for now. And so we make those decisions together. Actually, they make the decisions. I just guide the conversation. And then once those decisions are made, I take them and I make sure that the forecast and the budget reflect that. And then when you're done going through every single department and doing that, you have a pretty bulletproof plan.
I love that. Being a CEO is man, like you're the ringleader of the circus. Right?
Circus, you got that right.
Like you set the foundation, you set the tone, and you guide the show along to its destination, which is to please the customer. The people that are paying their dollars for your business to provide whatever service that is. You really broke down some things that I need to think about. Like as my biggest thing with this podcast is that it has always been just an extra thing that I do.
Right.
It's allowing me to meet great people like you. And, I've kind of just put it in that box, right? But there are a lot of opportunities to really build a business around this podcast. And this conversation is really, it's turning some gears for sure.
Any way I can be helpful.
Yeah, definitely. So let's talk about this education project / company that's getting ready to start. Well, actually, the free version has already launched.
No, not yet. Almost.
Okay,
it's coming out here in about 10 days or so.
Okay.
So, my whole thing, the reason why I wanted to do, the keynote that you were at, and, Top Tier Academy, and trying to give the free 5K challenges for people that graduated and stuff. The reason I wanted to do that was, like I said, there were so many people being sucked out of the Forex space, which at the time was our only option, for technical reasons I won't bother to get into details with. We didn't have a quick path to futures at the time. And so, okay, well, Forex is what we're stuck with. We're fighting over a smaller and smaller group of customers. Regulation is going to come a-calling anytime now. And that could damage the entire business. So to me, it only made sense to go full throttle into education. No one was really doing it well. No one was really highlighting it. And the one thing that when we had done focus groups was really clear was, if you educate us, if you train us, we'll be super loyal. Why are you going to go somewhere else? If I give you a free 5K challenge for taking a free course that's of good quality, when you most likely don't pass that challenge, well, of course you're going to repurchase from us.
Yeah.
Right. So the leadership didn't see eye to eye. In fact, after I resigned, they cut Josh Barnes and Sean Banks, the two guys who had helped me create Top Tier Academy, loose. So I'm like, hey guys, why don't we just do this? Except now that you guys have a big chunk of equity. So basically pulled some capital together, pulled a team together, basically from the, Top Tier basically said they still have Top Tier Academy that's out there, but they're not giving a free 5K challenge, and they're not really doing anything with it. The free academy, though, the other thing about it is any leader of any Forex firm or any trading firm, if they're being honest, says, I want you to be a good trader, but not too good.
Of course.
Right. So otherwise I'm not in business anymore.
Absolutely.
So In the same way that if you're a car insurance company, you don't want every one of your customers getting in an accident, so you're in problem. You got, or if you're doing real estate insurance, fire insurance in the West Coast,
Oh my goodness,
right?
man. Prayers
So
to my people over.
yeah, no,
over
I
in the
know. I've
West
got some
Coast.
friends out there, that really don't know if their homes are still around. It's
Wow.
heartbreaking.
Yeah, it is.
But anyway, so what I realized was, well, leaving was a painful decision. And what I realized was maybe a blessing in disguise, because now if we launch, so we're launching Elite Trader Academy. We already have done some stuff out there. We're already doing a little bit of education and mentorship. But we're going to basically, the nice thing about it is now we're not limited to Forex, because I was part of a Forex firm. So of course we're only going to have Forex education. We're going to launch with Forex. We're going to have Forex, futures, equities, options, crypto, the whole 9 yards. And now we no longer have that friction of, hey, we want to make them good, but not too good. I want to make them as good as possible.
Yeah.
And because the better they do, the more education they're going to want to purchase from us. So they'll get their education for free. We can partner with other prop firms to do the free 5K, which is a good deal for the prop firms and a good deal for the customer. And we're bringing new entrants into the market, and we're able to monetize everything downstream. No regulatory risk. Okay. You're not limited to how you're able to advertise when you're doing education versus doing, anything related to, trading. That's much more restrictive. So, so it just made all the sense in the world, and do it in a way that, all the people that, because one of the other struggles I had at Top Tier, most of the companies I've run, well, I've had equity in all of them. And I made sure that when I was the one making the decisions, every employee had equity. And that's true at Investify, because if you want people to act like owners, you have to make them owners. Leadership wasn't comfortable with that. And so while I had equity or a path to equity, everyone else didn't. And that was something I wasn't thrilled about. Now I don't have that problem. Now everyone has equity. So the people that are going to be building the business and generating the value of the business are going to generate huge upside for themselves. And that's what I want. I mean, for me, I'm pretty comfortable. Yeah, sure, I'm happy to make more money.
Yeah.
Money's not what's driving me. To me, it's much more about, I got to feel good about what I'm doing and who I'm doing it with. And so long as that's true, I get really excited every morning to get up, get after it.
That's awesome. So you mentioned that you raised capital for the educational platform. Did you invest that capital personally?
Some of it.
Okay.
Yeah. So again, I fully believe in the business.
Yeah.
Right. So to me, it's about as low risk of an opportunity as there is.
I love that.
So yeah, so it's elite-trader.com is the URL. But so I think 22nd is our target date to launch the free Forex education. And then we're also going to be doing boot camps. And Sean Banks, one of the guys who helped us do Top Tier Academy and now helping us do Elite Trader Academy. He had run his own academy for from like 4 or 5 years and like 1,500 people through it.
Wow.
So he's really been instrumental in helping us put together just world-class education. And now we're able to do things like, again, some of the learnings from how we did things with Top Tier Academy. We used a platform called Kajabi, which wasn't that great. It has a lot of limits. So now we're using something that's much more sophisticated. So doing it a second time, we've been able to sort of fix all the problems that we had the first time around.
That's
so
awesome. So about 10 days from now?
Yeah.
What's the date?
The 22nd, January 22nd is the target date.
2025.
Yep.
I love it.
Yeah.
I love it.
So just follow us on Instagram or, or go to our website and you'll be able to basically get, again, I don't know if we're going to have if we don't have the free 5Ks right from day one, we'll have it within a few weeks.
Okay.
So we want it to be a similar kind of thing where anyone who who takes the trouble to go all the way through Elite Trader Academy, they'll get a free 5K challenge and be able to. We're still trying to figure out who we're going to partner with.
Yeah.
But once we figure that out, because it's a great deal for them. We're going to bring them a whole bunch of new customers.
Yeah.
So why would they not do it?
So Elite-Trader.
Elite-trader.com.
Love it. Love it. Love it. That's really good, man. Really good. So you have a daughter.
I do.
How old is she?
She's 24, about to turn 25.
Okay.
Yeah.
What's the best advice that you think that you have given her in terms of her career and where she wants to go in her aspirations?
So this will sound sexist and maybe get me canceled. It's a little different for a boy or a girl. The advice I would give a boy or a girl might be a little bit different. For my daughter, and some of this I think does apply to both genders, is the two most important things early in your career, especially if you're doing something where you're not doing something like entrepreneurial, right? And I might even put sales into that category. which is kind of sort of like, sort of an individual sport, if you will, to some extent.
Yeah.
If it's not that, and you're in more of a corporate job, and even if it's a smaller business, 20, 30 people, the two most important things are, what are you going to learn? Like, what things are you going to add to your talent stack? And who do you work for directly? Like, who do you directly report to? And is that person emotionally invested in your development? Those are the only two things that matter to me. And so that's my guidance too. So my daughter, her first job out of college, she worked for a company called Ibotta. They do rewards, and they do stuff for companies like Procter and Gamble and Walmart and huge companies, Dollar General, and they were pre-IPO. So they basically IPO'd, and here she was at the time, 24, and made like $40,000 her first job out of college when they IPO'd. But she also said every Sunday, I hope I get hit by a truck so I don't have to go to work on Monday.
Oh my God.
I'm like, all right, you need to change jobs.
Yeah.
So I was after her for about 3 or 4 months. You got to quit your job. You got to quit your job. Finally, she took my advice, quit her job, got another job that's, much less intense. For her, she's so self-critical that having a job for a critical boss working 70 hours a week is just not healthy for her.
Mm-hmm.
So you got to find the thing that's also, and that's another advice I give, is find the company that's the right cultural fit for you.
Yeah.
Some places are going to be crazy, hard driving places. And if that's your personality and you're super type A, that might be a great place to be. And I will say, even though it wasn't the right place for her culturally, at Ibotta, she developed, I would say 10 years worth of experience in 2 years. Like, her ability to do spreadsheets, PowerPoints, emails, selling, customer success, client management, because she worked for, some bosses that were really, really on top of everybody. And they were working so many hours, and they were pre-IPO. So revenue was so important.
Mm-hmm.
It was so intense. It did accelerate her professional development like 5X, literally. Wow. 5X. So I think it was a good experience for her, but I'm glad she's now in something a little bit more chill. And now that she's in a thing that's more chill, one, she looks like an unbelievable rock star because she's acting like someone who's 10 years older than she is.
Yeah.
In terms of what she's being able to deliver from a results standpoint. But I would say, the whole thing is do what you love. Not the best advice. I think you got to focus on your talent stack, focus on who you're going to work for, and really, make sure that the cultural fit is there. I think if you can check those 3 boxes early in your career, that's a good place to be.
I like that advice. A lot of us have been sold that dream. Do what you love, follow your passions, follow your heart and all those things. But a lot of times the things you love, they don't generate any opportunity in the marketplace of substance for an adult. Like, I could love to dance to Ricky Martin in my boxers at home, but that's the only good there is probably an Instagram reel or something like that. That's probably not going to award me a career, right?
Right.
But what you said is so powerful. Like, we have to look at our talents, hone our gifts, the things that we're naturally good at, the things that Calvin does that the average person will look at that and say, man, you do that very, very well. But to me, it's like, oh, that's just natural to me. And hone that, get better at that. And to be honest, that is what has allowed me to do the many things that I do. My personality, my energy, people love it. So I started honing that. Hey, like, how can I learn how to, meet people and, communicate better and be more open and be less of an introvert, right? And how can I, maximize my vocabulary? I'm still taking communication classes, learning how to hold conversations better, things like that. But I just believe that we need to hone in on our talents. God gave all of us an edge in life.
Yep.
If we maximize that edge, we never work a day in our lives anyway, because we're just showing up and we're doing things that, at times it does require effort, but the effort that we put into it versus an average person trying to do something that we have a superpower in, the result is like second to none. Like, when people look at it, they're like, man, Calvin did that thing like crazy. Like, I've hired and fired 6 people and they couldn't do it at that level, right?
Right.
But I come in and I put a little effort into it because it's my strength.
Right.
And it's like, I look like Superman. So I like that you said that.
I would say something else too.
Yeah, come on, add to that.
So, because I think you're right. I think that, first of all, I think it's hard to hate something you're really, really good at.
Yes.
Right. It's like, you're the best basketball player. You're the best, piano player, whatever. Yeah, maybe you didn't hate, maybe piano, maybe you didn't love all those lessons you had to take from the time you were 5. But now that you're really good, you like playing in front of people, right? It's
Correct.
like you can't be amazing at something and hate it, for the most part.
Mm-hmm.
I think people underestimate. It's very different. Like, let's take your dancing in your boxers Ricky Martin example, though maybe people don't want the visual. But ultimately,
Or
if
maybe they do.
maybe they do.
Maybe they do.
But suppose you had to do that 8 hours a day.
There you go.
Right. So now it's not, hey, I'm having a little fun and I'm dancing in my boxers. No, I got to dance in my boxers 8 hours a day, 5 days a week. Right. Now all of a sudden it's a different thing. I remember years ago, back when online poker in the US was still legal. And I love playing Texas Hold'em poker. And I had a guy who was a good friend of mine who worked for me. He was a really good poker player and he was teaching me. And I really liked playing poker. And so I was like, oh, maybe I should, So I started playing online a lot. And what I realized was, to be good, I was having to play minimum 4 hours a day, 6 days a week. And I was playing like 5, 6 simultaneous hands for that whole time. It wasn't nearly as much fun when I was having to spend that much time doing it. The reality is, nothing you do is going to be 100% fun, right? No matter how, even if you love playing golf, okay? But if I say you got to play 3 rounds a day, 5 days a week, you're going to like playing golf less, So it's like, it's the difference between a hobby and a job. And I would say that you do want to pick something that you have passion for sure, because that comes through, right?
Yeah.
It's like the salesperson who really believes in what they're selling you, and the salesperson that can sell ice to an Eskimo, right? It's like, yeah. So I feel like it's a bit of a mix, that you want to pick something you've got real passion for, but understand there's going to be part of any job that's going to suck a little.
Absolutely. Yeah. Yeah. I agree. And that's why, like, I just, like, to your point, like, I just love to focus on, because I have things that I'm super passionate about, but I'm not good at them. Right. But then I have things that I'm like, I know I have a natural ability to do it, but I may not be passionate about it because I know it comes easy to me. Right. So the thrill is not really there. The excitement is not really there, but I can get it done at a high level. And so those are the areas now, as I'm in like this husband phase, this parent phase, I'm into my 30s now. It's like, now I'm only focused, like, any opportunities that come my way. Is this something that I'm already using? Like, is this something that I'm already, good at, or that I know I can come in and add immediate value right away? If it's not, I'm just not at the stage where I can devote time and energy into doing something that I know isn't going to be an easy, feel for me.
Sure.
So to speak.
Yep.
And if I could go back in time, I would focus more time on the things that I know I'm great at. Right.
There's a technique, though, that's available today that wasn't available 10 years ago, 15 years ago, that my daughters use, that I've counseled other people to use, that would have worked in your situation too, which is, I think that, so as an example, when my daughter left her job at Ibotta and she didn't know what she wanted to do, and I was paying her bills, and my daughter's one of these people that, like, part of why I'm so generous with her is, like, she doesn't want to take anything from me.
I love it.
So she's really got a great moral compass. Anyway, so she's freaked out. She wants to get a job right away. I'm like, take a breath, take your time. She's like, well, I think maybe I want to go back and get a degree and become a dietitian. I said, well, here's what I think you should do. Before you go back, spend 2 years getting an education, creating student debt for yourself. And maybe when you're done, that's not what you want to do. Instead, spend a month doing what I call informational interviews. And so what I basically said, LinkedIn's an easy way to do it, though there's other ways to do it. You do it on Instagram too, is reach out to people that are 3, 5, 8, 10, 15 years down the path you think you want to pursue, in her case being a dietitian. Ask them, can I buy you lunch? Can I buy you a cup of coffee? Can I buy you a drink? Can I just pick your brain? You're not asking for a job. You're just asking them for advice. You'll get an 80% hit rate. 80% of the people that you ask for advice will say, absolutely, they're flattered that you asked them. Okay. And then when you meet them, ask all the obvious questions. Tell me what you love about your job. Tell me what you hate about your job. If you could go back in a time machine and do something different, what would you do different? What advice would you give to me, given where I am? All that kind of stuff. You do that for a month. Maybe you ask them, hey, can I shadow you for a day? You do that for a month. I guarantee you'll know whether you want to pursue that or not. Okay. And so she did. She spent a month and she's like, I absolutely do not want to be a dietitian. I said, wonderful. That was a wonderful time spent. Better than spending 2 years going down the path. The number of people I know that went to law school, then when they were done, became lawyers, because what the hell else am I going to do? I created all this debt. I spent 3 years doing it. I told everyone, bragged about how I'm going to be a lawyer. I got to be a lawyer. and they hate being a lawyer. So spend that time instead doing these informational interviews, and you could do it for anything. Wanting to, get with a record label, whatever it might be. Find people that are doing it, offer to take them to lunch, to coffee, whatever, and pick their brains. Again, people that are further down the path than you are, on the path you think you want to be on.
Yeah.
It'll become really clear.
That's really good advice. Come on, man. Ladies and gentlemen, Dave is in the building. Listen, if there's anything that I didn't ask that's on your heart that you would want to share to traders, entrepreneurs, I believe traders are entrepreneurs. You want to control your own destiny. You want to build something for you, your family, your legacy. Any advice or just anything on your heart that you just feel led to share, please do that. Also, let us know where we can follow you.
Sure.
Please plug Elite Trader,
Right.
and any other thing that you want us to check out. Please do that.
Look, I mean, obviously, Elite Trader Academy, I think we'll be launching on the 22nd, certainly by the end of the month. And find us on Instagram, find us, on our website, elite-trader.com. My podcast that I just launched a few weeks ago.
I forgot about the podcast.
No,
How can I forget about the podcast?
No, you're good. I'm actually launching. It actually launched today. So, funny story. So when my daughter was going off to college, we were always very close, and I was really worried because I didn't, when I went off to college, I couldn't wait to get out of Dodge. So I got along great with my parents, but I wasn't wanting to hang out with them. Yeah. Back then, there were no cell phones, there was no email, there was none of that.
Life was free.
So yeah, I talked to him a couple times a semester. And I'm just oh my God, I'm barely going to talk to her. I would see her all the time. Now I'm not going to see her as much.
And that was normal back then.
That was totally
normal.
People
didn't hear from you, for a week or two or a month. That was normal.
100%.
Yeah, it was totally normal.
Totally normal. So in my head, I'm thinking that's what's going to happen. So I'm racking my brain. What can I do to stay connected? So I had this idea. So I listen to this podcast every day called Coffee with Scott Adams. He's a guy who I follow, really smart guy. And I was like, my daughter's nickname for me is Podge. I don't know where she came up with it, but whatever. She's called me Podge since middle school. Her friends call me Podge. Anyway, so I did this thing, a 5-minute episode I recorded every Sunday. I called it Coffee with Podge, and I would send her the video, 5-minute video, so she could watch it on the way to campus. And she said it was the most thoughtful gift I ever gave her. And then she started sharing it with her friends. And then they would say, hey, Podge, next week do an episode on this or do an episode on that. So I decided that, I do a podcast every Tuesday. Every Sunday, we're going to launch in fact, it probably has already gone out, a Coffee with Podge episode. Today is the first Coffee with Podge episode.
Wow.
So I'm really excited about that. I'm going to be writing blog content every week. So follow me on, David-Gutman.com is my website, but you can find me on Instagram. You can find my channel on YouTube. Just type in David Gutman podcast and you'll find me. But look, at the end of the day, I'm not really monetizing any of it right now. Maybe I will later, but for now, I'm just trying to be helpful. I mentor a lot of people. It's one of the most, now that my daughter's older and kind of out of the nest, if you will, I kind of miss that. And so any opportunities I have to, again, touch people's life in a positive way, I want to. So. But I really appreciate your time today, Calvin.
No, this has been fantastic. And this is why I'm here, because we need I don't want to say this, but this is how the average trader perceives it, right? When they see the influencers or the people behind the companies, we're kind of the gatekeepers, right? And it's very rare that we have conversations like this where people are as transparent as you are, and they're not forcing their narrative down your throat. They're just giving you, this is what it is. This is what the industry is. This is how things work. And yeah, let's have conversations on both sides. Let's have conversations from the trader's point. Let's have conversation from the business point. And I feel like you did a fantastic job of sharing both sides. And so what I want traders to do as you watch this, get the information and figure out, based on where you are right now, where you fit and what type of plan can you create to be successful by doing that. And it's been an honor. It's been a privilege. And I hope this isn't the last time we meet.
It definitely won't be the last time, Calvin.
Yeah, man. Let's definitely get together again. Let's do another pod as the company grows and traders have some great success stories. Man, I think what you guys are doing are amazing. And I look forward to seeing the growth. And man, I can't wait one day to look on the news or the stock exchange and like see that the company has IPO'd.
Well,
The
we'll
crypto
see.
company is
Yeah.
IPO'd or something like that, man.
You never know. If I've learned anything in the last 10 years, you never know what the future holds.
And I see
Yeah.
you ringing the bell, man, right there on the floor one day.
Yeah, I appreciate that.
Hey, listen, ladies and gentlemen, Calvin, Forex Beginner Podcast. Thank you so much, Dave. Again, this has been very, very insightful, very, very blessed to be here and very, very thankful for your insight. Ladies and gentlemen, you already know it's your boy Calvin, man. God bless you guys. Take care. And I'm going to change it up today. I'm going to say this. Call somebody today, text somebody today, tell them you love them, tell them you appreciate them. If there's something that you have not shared with somebody that you just feel like, hey, this is somebody that's add value to my life. This is somebody that has been around, has been there through the thick, through the thin, everything in between. Send them a message today. Let them know that you appreciate them, that you love them, that you care for them. And we're going to drop the mic with that note. God bless you guys. Talk to you later. Peace.